So now we're officially on the record. So I will send you the link after, which and to the people who couldn't make it along today. So again, it's probably the first revision we've had, so I'm not really sure where to start. Probably the best place to start is just in terms of giving you an overview of the whole risk module. I said earlier that people who have difficulty with this tend to be people who overthink it. All right. So if you're trying to work out all the details and understand and remember everything, that is not the point of what we're doing here. So we just want you to know that what the purpose of this module is to give you an overview of accounting. We know you are not accountants. We know you don't want to be an accountant. There's two reasons why we cover it. Number one, because most of us report into finance, we have to know the language of finance. And I think it was Warren Buffett said that accounting is the language of business. So it's important that we know and we understand what's going on. So that is number one. Number two, at some stage in your career in credit management, somebody is going to drop a set of accounts on your desk and say, they're looking for 30 grand. Are they okay? And, you know, to a lot of credit controllers out there, that is like looking into a field. They really don't know what they're looking at. They don't know what it is, what it does, where it came from, what it's telling us. And that's one of the things. Having completed a diploma in credit management, I think it's important that you have that level of understanding where you're able to look at a set of accounts and make sense of it. And that's really what the whole thing is about. Let me just take some notes here. Brigitte, Jim, and who else came in there? Edwina. Okay, so that's what it's all about. So I suppose the first module, and guys, don't get hung up between debits and credits and trying to remember all the rules and regulations. That is not what's required here at all. So what we want to do is we want to give you an overview of accounting. And look, accounting is only recording the financial transactions within a business. That is all it's doing. And to be honest with you, maybe if you get into your head when you're going through this, just imagine for a horrible moment that you are the financial controller of a business, and the business is involved in buying stuff and selling stuff, because most of the examples that we work in are trading companies, i.e. they are buying stuff. So they buy products from their suppliers and they sell it hopefully at a profit. So if you can get that around, so we're setting up a business here where we're going to be buying stuff and selling stuff, and that's all. So if you keep that in mind, that's what it's all about. So let me just maybe go through quickly the notes and put it into prospect for you. Let me see if I can finish the save. So in terms of module one, you know, it's literally just an introduction to credit management. We're giving you the reasons, and hopefully we keep it fairly simple. The accounting equation. So we start with starting up a business. So a business starts, where does the money come from? Where does the money go to? And that's all accounting is doing. It is recording where the money is coming from and where the money is going to. That's all that we're doing. So if I start a business and throw 150 grand into the business to start it off, from a business perspective, that 50 grand is capital, and that 50 grand goes into the bank. And everything in accounting has a two-sided entry. And the reason for two sides is very simple, that the money comes from somewhere and it goes somewhere. So, and what we're recording all the time. So money doesn't come from thin air. So from, if I am starting up a business, I put 50,000 into the business. That 50,000 is the capital of the business, and that money goes into the bank. So now I have my 50 grand in the bank and capital. Then I buy a machine for 10 grand. I take 10 grand out of the bank and put it into a machine. And all the accounting records and all the books and all the records and debits and credits and all that nonsense is only about recording where the money came from and where the money went to. So that's it in simple terms. So when we look at the modules, yes, we give you reasons for accounting, and this is kind of just general knowledge stuff. All the different language and all that kind of stuff, again, that's just for your benefit to know. And in terms of accounting concepts, when you're dealing with accounting, it's good to know, and when you're looking at a set of accounts, that we're looking at what should be the worst possible position at all times. So accounts have to be prudent. You have to be, you can't just invent figures and pop them in. And obviously accounts are done on the basis that the business is going to keep going. So they're just all the different principles. And in terms of the test in your workbook, so when we explain, and everything is explained there in the notes, and then let's see where I can get this here. Risk workbook 1. So when you get to page 5 here, let me just drag this across here, go there, bump, and let me just do this here, bump, just drag this over here. Right, so again, the answers, sorry, test 1, we'll start with test 1. All the answers to the questions are in the notes. So if you go back, and even if you do a search, what is the main purpose for keeping accounts? And it's very, very simple. It's to record the financial activities. So the answer to question 1 is E. So it's whatever. What are the 4 qualities that are essential in accounting? That is the 4 qualities, and it's in the notes: relevant, reliable, consistent, understandable. So, this is just to get you familiar with the terms and all that kinds of stuff. And as you go down through, here's Stuart is joining us now as well. So that's all that's required, and the answers to these are in the notes. So hopefully everybody got that. Same with test 2. One statement of the following is correct. So if we go back to the notes there for a minute, we move on. And this terminology, again, you don't have to remember all of this. And remember too, guys, when you're doing the exam, you will be sitting at home with the notes open in front of you. So we're not going to ask you what is an asset. I would expect somebody who is a professional credit controller to know what an asset is. That's just, so it is here in the notes, and hopefully it'll act as a reminder to you in terms of, and it's designed to demystify all the language in terms of what you hear and what you know. So we're just literally defining what everything is, and that's that. And when we get to the end of all those notes there, there's 2 tests 2 and 3. So again, that's just a test on what's there. That is fine. Then we move on. Now, the accounting equation is, and this, and we build this up over time. So, we said we're recording where the money came from, where it went to. So that's that. So step 1, we have 50 grand in capital, 50 grand in the bank. So the money came from the owner, it's gone into the bank. That's that. So your assets will be your capital. But if they now go and buy stuff, and if they buy it on credit or whatever the case may be, we have to add expenses to the capital, because the money we have in the bank goes in expenses. So if we add our expenses to our assets, that then becomes our capital. And obviously, if we're buying and selling stuff at a profit, then we add our profit to our capital, because that increases the value of the business, and all the assets and expenses will always equal your capital and income. And then finally, if we create liabilities, we buy stuff on credit or whatever, now we have a simple equation, and this is the final equation that says if you add your assets and expenses together, that will always be the same as your capital, your income, and your liabilities. So once you're looking at a business, that they are the only 5 elements within the business, and that equation will always stand up. So on that basis, when we go into the short tests and when we look at some of the workbooks, it's based on this final equation. So let's go in and see here. What's the test that we ask you there? And all this starts. So what we're doing is we're just building up a story from the start. So the owner puts money into the bank. There's your 100 grand in the bank. There's your capital. These are all the things they buy with cash. So now we record them as assets. And obviously it reduces your bank balance because you've paid them in cash. Then, so as the business builds, and every day there's all these transactions going through, and we need to record all the transactions in the books, and we just build it up and up and up and up. So now it's trading, it'll sell some stock. So now we're adding sales to our capital, and at all times, because it's two-sided, your accounts will always balance. That's the whole point about it. So it's just understanding what the individual transactions, the effect that it's having. So if I buy a car, I increase the value of my car, I reduce the value of the bank. If I buy it on credit, I'll increase the value of the car and I'll increase the value of my creditors because I still owe for the money. So just think about where the money is coming from and where it's going to. So this whole section in terms of building up accounts, I hope it is just telling you a story about the business, all the things that they're doing in the course of the business. And then we get to test 2 in the workbook. So let me see, risk workbook 1. So we move on to test 4. And this test 4, this is always this is working on the formula. So let me see. I'll just pop that over there for a minute. Test 4. So how do we work out? And again, here's Juliana. Again, we know from our accounting equation, right? Here that we said that assets plus expenses will always be equal to liabilities, income, and capital. So on that basis, if I want to know what my expenses are, right, I just take my capital, I add on, where's plus? I add on my liabilities, and then add on my my income, and I subtract my liabilities. So I subtract my assets there. So in order to make the equation work, and just put the numbers into the equation, that, and then work out what the missing one is. So in this one, we know that on the basis of that, our expenses have to be 30 grand. And again, same for capital, same for liabilities. The equation is the same. We just slot in the numbers we know, and then we can work out the numbers we don't know. And a lot of the time when we're in credit, we are dealing with, incomplete information. So it's literally just a matter of slotting the information. So now, that's and that'll give you a sort of a background in terms of what we want to do.
And then just
I'll
Declan,
just stop. Yeah, I'll stop sharing now. Yes, Angelina, go
I
ahead.
was just going to come in. So, you know, the short test for submission, your question 1 and question 2 are based on the accounting equation.
The accounting equation, yeah.
Yes.
And so all you need to do is just get out your equation. So it's assets plus liabilities equals capital plus income plus liabilities. We'll give you 4 of those numbers. So you just put the numbers in, and then, you know, again, hopefully you'll remember from maths back in school that if you want to get your assets figure, then you move your expenses to the other side of the equation. So that then changes to a minus. So your assets equals capital plus income plus liabilities minus expenses. If you want to find out what your expenses are, we move our assets over to this side of the equation and it changes sign to a minus. So whatever number you're looking for, I'm looking for liabilities. So we have to move these 2 over to the other side and they become minuses over there. So whatever, so in terms of your short test, and you said it's the first couple of questions. Where's short test 1?
Well, first 2, 1 and 2, yeah. So
Yeah,
that's 2 in the
1
bag,
and 2.
yeah.
So that's all that's required for test 1 and test 2 is just put the numbers into the equation and work out the missing one. Yeah. Now it's simple to me, and I know it probably looks simple when you're sitting there looking at me doing it. Come on, you're here tonight. Please ask questions, please. And if there's anything you don't understand, you know, we'll stick with it till you do. That's why we're here tonight. And if I have to, because I know I was very I don't know, you know, like whatever you need to know, like we are here to provide you with whatever you need to know. Is that okay? And I know, I think so somebody asked, and I'm not going to mention names, so I won't betray any confidence, you know, is there any simple accounting book you can read? You shouldn't need to read any book. The fact that you're doing this course and we're here to help you, you know, no. And if there is additional material that you feel you need, just ask for it, and if it's there, Angelina will give it to you, and if it's not there, I will write it. Okay, so that's grand. So yeah, so Juliana, I got your message, and yes is the answer. So we can sort that out later. Now, any questions to anybody or from anybody else?
Yeah, Declan, can I ask a question, please?
Of course you can. Thanks. Yeah, Beverly. Yeah.
I think for me it was more the formulas, because I haven't done algebra or anything like that since quite a lot of years ago. So for the percentages for your gross margins, those would be where I would have got more confused. And then when you put your test in and you've got it wrong, you don't get the feedback of where you went wrong and how you should work it correctly. You know, so when I go back to look at it again, I'm going, well, where did it go wrong? How did it go wrong? Where could I have improved that? So it's, for me, it's the formulations of the percentages to which is which was more question 3 likely up to question 9.
Okay, well, let's just
I like the
let's have a
overview,
look.
as Angelina had said.
Let me see, risk test 1 solution. Okay, so if for example, well, question 3 again. Now what we're doing is, and we didn't cover it here, that what we know is from the top of our from the top of our P&L account. So how do we calculate the gross profit? So we calculate the gross profit by adding our sales, right?
Declan, will you share your screen again first, please?
No, I'm keeping it all to myself, because if you can see it, then that'd be no fun at all. Yeah, thanks for that. Share screen. Here we go. Okay, share. Right, so now you should be able to see short test one. So we know when we look at a set of accounts, we know that our sales, right? So how do we work out what we're doing here? Just hold on now. Let me get my short test here. You see, this is beyond my capabilities here. Yeah, I just want to make sure I'm not confusing you here. Okay, so now question 3. Question 3. So what we do is we say, okay, so how do I calculate my gross profit? So what we do very simply is, let's come down here, and we start with our D16. We start with our sales, so plus our sales, right? Then we have to subtract what we bought, which is our purchases. So that's what we bought, that's what we sold. And if everything else was equal, that would be our profit. So we bought that much, we sold it for that, that's our profit. We know, though, that we've done the first lesson in accounting, that our opening and closing stocks are going to interfere with that as well. So what we have to do is we have to add on our opening stock because that was there available for sale, and we subtract our closing stock because that wasn't available for sale in the period. And then we know that if, no, I haven't done it right. I've done something wrong. No, I've done that wrong. Sorry.
Sorry, can I ask a question?
Yeah. Yeah, please do.
This is Virginia here. Yeah, so there was some parts like in terms of like, I'm not sure if it's, oh no, it's not here. Maybe I'm too early. Sorry. That's about the depreciation and the percentage that I got sort of, depreciation. Yeah.
Yeah.
Correct. I'm saying correctly. Yeah. And there was a percentage involved and I wasn't sure how it was going to impact.
And is this in the short test?
No, this was in the longer one, but then I kind of took them off, but I'm not sure myself if that was correct.
Okay,
And
well,
there
look,
was-
I'll get to, I'll take care of that, and I will cover depreciation and
Okay.
percentages, because sometimes percentages can cause people a problem, you know.
Okay,
So
thank you.
so that is that. And so it says, what is the value of the gross margin? And again, go back into your notes, look at your formulas. So there we are. So we subtract our purchases from our sales, we subtract our opening stock, and we add our closing stock, and that's where we get our gross profit. So we sold 632,550 quid's worth of stuff. We made a gross profit of 235.40. So if I want to work out the percentage, then all I have to do is just divide that by my sales. Sorry, D16 divided by that. What am I have to do there? Put that into it. No.
So you're dividing, sorry, Declan, you're dividing your gross profit, is it?
To get a percentage, yes. So it's plus my gross profit divided by my sales. Sorry, is that?
Okay.
Yeah. And now as you get 0.37, and if you're doing it in Excel, you can just format your cells. Where is it now?
You can just go up to the top.
Percentage, and 2 places decimal is always enough, and even 1. So what I do, if I want to get it in terms of percentage, I just divide one number by the other. So if I want to get the value of the gross margin, it's 235,420. What's the percentage? Just divide my gross margin by my sales, and it's 37%. That's
Okay. I was kind of thrown by the way that was worded. I thought that was 2 answers. I was just totally confused when it said the value of gross profit and margin percent, and then it said what is the margin percent. So I wasn't sure if that was 2 answers we needed or 3 answers. I was just very confused.
Yeah. Okay.
So
well, then
really, that margin part comes out of it.
What is the value of the gross profit?
Gross
So
profit.
get rid of margin percent. Okay.
Yeah.
So what is the value of the gross profit? There it is. And what is the margin percent? Okay. So now that has been changed for all future students. So you see, it was worthwhile going along tonight. So
can
two
sorry.
questions, two answers. Yeah.
Can I point it to that one also, because I know I got that in the email from Angelina, at the round to one decimal place that should be a little bit above, because I wasn't sure to this annotation is to which question, to the question 3 or 4.
Oh, okay.
You
weren't
see
sure
the
to go round
text
to
that
decimal place?
it's F22.
Yeah.
Column,
Right. F22.
yes.
So
Yeah, because I done the same. Because I had
Yeah, the
wrote
note
down
round,
here says
sorry,
what
round
time
to one
rounded
place of
the
decimal.
decimal point.
Yeah.
Yeah,
To move that
so I've done it here to 2. So just let's see, format our cells again and just go down to 1, and that's it. So 37.2. So round to one place of decimal, 37.2. And one place of decimal for everything that we're doing. You don't need to have 47 numbers just to confuse you. So anytime we're doing percentages, one place of decimal should be more than sufficient. Is that okay? And just to keep it simple for yourselves. So that is grand. So now again on question 4, we have two questions here again. What's the value of purchases? So if we're looking at a P&L account, we know that we have our sales, which is the whatever that figure is. Then below that we have our opening stock, purchases, less closing stock. And that's what gives us our gross profit. So just to explain what we're doing here. So in an ideal world where a business doesn't keep stock, you buy something for 100 quid, you sell it for 150, you've made a 50 quid gross profit on that stuff. So we just subtract our purchases from our sales. Because we're doing a set of accounts and we're concentrated on a specific period of time, so from the 1st of January to the 31st of December, what we have to do is we have to say, okay, this is what we bought and this is what we sold within the period, but we had this load of stock sitting in the warehouse before we started, so I have to add that to my purchases to see what did I have available for sale during the year. And this stock, the closing stock that we still have going into next year, that wasn't available for sale within the year, so I have to subtract that away. So that's how we calculate. So we get our sales, we add our opening stock to our purchases, and we subtract our closing stock, and that's our gross profit. So knowing that, then all we have to do here is just slot in our figures. So we have our 875,000 is our sales, our opening stock, our closing stock, and we know our gross profit, so we know the answer. And then we just have to work back then to the purchase figure. So what purchase figure would I need in order to get that? Okay, so what we'll do is to work it back to that, we start with our sales, plus, oh no, I got rid of the line, didn't I? So that's our sales. Yeah, I see. The last thing I want to do now is start confusing you with
you
stuff.
just have to do equals, Declan, instead of plus. You just have to do equals.
And I just I'm trying to make it as easy as I can without making it more complicated. Maybe if I do it over here, it might be clearer for you. Opening stock, copy there. Paste. Purchases, we don't know. Less closing stock is that. and our gross profit figure. Okay. There, I'll just put it up there. So that's our gross profit figure. And we also know that our cost of sales is, so if we subtract our cost of sales from our sales, we get our gross profit. So if I want to work out what is my cost of sales, all I have to do is subtract. So my cost of sales is my cost of sales. So if I subtract that, my sales, subtract my gross profit from my sales, that gives me my cost of sales figure. Isn't that right? So that is my cost of sales. So if that is my cost of sales, then what are my purchases? Right. So that is the figure that we're looking to work out. So actually I've answered question B, what is the value of cost of sales? So my cost of sales is the difference between my gross profit and my sales. And then what is the value of purchases? So again, if I want to work out my purchases, I know that my purchases are, let me see, my purchases are the difference between my cost of sales. We got this right. My purchases, and let me get this right. Purchases. No. What are my purchases? Purchases is my cost of sales
Plus your closing stock.
Yeah,
No?
yeah. Minus, sorry,
And minus, yeah.
sorry. It's purchases is plus that minus that plus that. Let's see if we get that right. Yeah. So now I've worked back. So by doing the sum and by showing it out, so that's what my sales are. That's what my opening stock is. That's what my closing stock is. That's what my cost of sales is. That's what my gross profit is. So now I can work back from those figures. Again, it's kind of like test 1 and 2, where we're starting with a formula, we're filling in the numbers, and we're working in the blank. So 4A here is 580. Sorry, no, I've done that the wrong way around. Sorry, no, I haven't.
No, you didn't.
What is the value of the purchases? The purchases are 586,650, and what is the cost of sales? It's 591,960. So now we're flying here at this stage. Yeah. Now, I must say,
This really throws people, Declan.
I know, and I kind of feel guilty sometimes, and when I see people struggling at this, I suppose it, and
feel the guilt.
because I think of all the questions in the whole course, in this subject and every other subject, I think this is the only question where we throw in a red herring just to confuse the life out of you.
Thank you, Declan.
Because and I suppose maybe it's an early test of understanding, because if a company earns a net profit of 10% and a gross margin is 42, how much additional sales would they need to achieve in order to recover a loss of 34,500? Now, the gross margin has nothing to do with that, and the bad debts have nothing to do with that whatsoever. So if you have a loss of 34,000 and you have a net profit of 10%, then you need to have sales of 345,000 to cover it. So The only figure that's relevant there is the net profit. So you need a net profit. So a net profit of 345,000. Sorry, how much sales? You need sales of 345,000 to get a profit at 10% of 34,500. All the other information is superfluous.
Is it
And
just
I can
that simple?
It's that
It's just that
simple.
simple.
That's
Yeah.
simple.
Oh,
You just multiply.
I made a lot of calculations.
Oh my
multiply
I
it
did
by
so
10.
much, like I went all over the place. Oh my
Of course you
goodness.
did.
Too early for that, Declan.
Is it? Maybe it
Yeah.
is. Yeah, and I. Yeah. Okay.
It is when we're
Yeah,
not
yeah.
used to the material.
Yeah,
I
yeah,
mean,
yeah.
Yeah. It's the only unfair question. I promise you there'll be no more red herrings in the course, and it just seemed like a good idea. And I suppose it is a bit of a test that if you understand that, you know, that in order to recover a loss of 34.5 grand at 10% profit, you have to increase your sales by 345,000. And guys, that is credit control as far as I am concerned. You know, sales guys are great if they sell 345 grand's worth. And if we prevent a bad debt at 34,000, it has exactly the same effect on the business, you know?
Declan, 10% of 34,500 is not 345,000.
No, the question is how much additional sales would we need in order to recover the loss? So
Yeah, so you're telling me for you to get 34,500, you're multiplying it by 10%.
no, I'm multiplying by 10
110.
because
Can
the
can you
bad
explain
debts
why
are
though? I mean, I
10% of my
don't follow
sales.
it.
Mm.
I don't understand the logic of it.
Yeah, me.
That's what I'm struggling with.
Okay, so
If for every 100 we earn 10%, so it's €10.
yes,
We lost 34,500 euro.
yes,
We are short and we want to earn that money, so we are on the zero. So we have to multiply by 10.
exactly. So because it makes a 10% profit, that means that for
Oh,
every
sorry, yes.
loss that we have, good. Now I'm glad. I love that sound. That's my favorite sound on these calls. And I want to hear more of them. So if we're making 10% profit on business, so if I write off 10 grand, I have to make 100 grand's worth of sales at 10% profit to cover that 10 grand loss. And in this question here, if I have bad debts of 34,500, I have to sell 345 grand's worth of stuff in order to cover that loss. So it's, and that is the importance of credit control as far as I'm concerned. Yeah. So I'm sorry about the gross margin. What do you think, Angela?
Yeah, it does throw, actually, it throws everybody, to be honest with you,
Mm.
the majority of people, Declan. Yeah.
I know it does.
Mm.
It's just okay. Go on, Scott.
If I can add something, it was, in my opinion, it was good question, because a lot of times when we request finance, we're getting a bunch of the documents, and if somebody wants to hid something from us,
Yes.
he's giving us a lot of irrelevant information, so we're drowning them. So we need to just take what we need and ignore everything else.
And that's part of the test. Martin, I'm with you, but I'm also with everybody else. It's
It's
question
just a little
5
bit too
on
early,
test
I think,
one.
for the material.
Maybe,
Yeah,
Yeah.
later on, maybe.
Yeah, maybe in
Later on in
module
the
4
course.
we'll throw in a few red herrings
Yeah.
just to confuse. Maybe question
Not
5
too
on test
many.
1. So okay, I've just changed that. I've taken out the gross margin altogether. So a company earns a net profit 10%. It incurred bad debts of 34,500, and which additional sales they need to achieve in order to cover the loss. And there it is. It's just 10 times your loss is the sales required. Yeah.
Yep.
Okay,
Thank
so
you.
so you see, I told you it was just multiply by 10. Come on, lads. What is it? I would hope that, you know, that everybody knows that a debtor's balance is an asset. So it's something that the company owns. An asset is something they own, a liability is something they owe. So a debtor's balance represents an asset to the business. the balance sheet. Now, this is
Yeah.
you to think as well, and I'm not going to apologize for making you think. So, and this sometimes confuses people. So the bank balance in the nominal ledger is 24,750 CR. And you know, if you get a bank statement and you're overdrawn in the bank, there's a big DR written beside the numbers on the page when you get your bank statement, or when you look at it online, if you choose to do that. All right. And hopefully this will clarify it for you as well, that if you are overdrawn in the bank, you get a bank statement that says DR beside it. That is because that is exactly what it says. It is a bank statement. So that is the statement of the bank's records. So if it's a debit in the bank, it's a credit in our accounts, because we're looking at things from two different ways. So if the bank balance in the bank account is 24,000 CR, it's a liability. We are overdrawn by 24,750. And hopefully this goes part of the way to explain why accountants and credit controllers are on opposite ends of the spectrum, because we're looking at the same situation from two different angles. So a CR balance in the nominal ledger is an overdraft, and it's a liability. Is that all okay?
Yeah.
That is grand. Now, this, and again, maybe this is a little hobby horse of mine. And I hear journalists on the business news talking about margin and markup and all that kind of stuff, and they just don't know the difference. And to me, they lose all credibility. They lose all credibility if they're that financially illiterate. And I certainly want diploma holding credit controllers to know more than that. So sales. So just let me give you an example. If my sales are 100 and my cost of sales are 60 and my gross profit is 40. Okay, so they're the sums. I've sales of 100, my cost of sales are 60, my gross profit is 40. Now my profit is 40, that is fine. And let's say we've no opening or closing stock, so that's purchases. Right, so that is fair enough. So 40 is our profit, that's grand. If I am looking at margin is based on sales. So my margin on that is my gross profit divided by my sales. So margin, it's called a profit margin. It's profit on sales. Yeah. Well, sales percentage 1. Okay, so that is 40%. However, our markup is what we mark up the purchase price from. So if I want to get my markup, what I do is I calculate my profit based on my purchases. So now I divide my gross profit by my purchases. And then I should have done that the same. Format cells percentage 1, just to keep it consistent.
Can you just say that again on the markup there, please, Declan? So
I buy something. So I have a markup figure in my head. So say I have 66.6. So what that means is I buy something for 100 quid, and I buy something for 100 quid. And well, let's take 50% as my markup, just to keep the sums easy. Or in a lot of shops, it could be 100% markup. Do you know that? So 100% markup. So what I'm saying is I have a shop and I'm selling novelty items. I buy something for a £5 and I sell it for a £10. Right? So when, because I have 100%, so whatever I buy it for, I double the price. So that's 100% markup. So 100% markup. So, and I know when I get my invoices in from my supplier, they charge me 50 quid for that. My price to my customers is 100 quid. And I think that's obscene. That's the reality in most businesses, to be honest with you, if they are buying and selling, and particularly if they're importing or manufacturing, 100% markup. And in clothes shops and jewelry shops, you could be looking at 200 or 300% of a markup. So I buy something for 100 quid. I know my markup is 50%. So, or I know it's 100%. So I buy it for 100 quid. I add 100 quid on, and now my selling price is 200. Yeah. That's how it works. So if my purchases are 100 and my sales are 200, yeah. Now this is kind of important. My gross profit is 100, yeah. So just look at this, and hopefully this will make it clear for you. So I buy it for 100, I sell it for 200, my gross profit is 100. So my markup is 100%. I'm marking up the purchase price by 100% to get my selling price. But if I'm looking at my margin is the profit out of my sales. My margin is only 50% because I sold it for 200 and I made 100 quid profit. So my profit is 50% and my markup is 100%. They're two totally different things, and they're so often interchanged and people don't understand the difference. So I mark up the cost price and the profit margin is in the profit. Does that make sense?
I get that, but I'm still confused how to work it back when somebody gives you the markup. Like, it's easy enough to see when it's 100%, it's very easy. But like when it's 60% or when it's 25%, or I'm confused how to work it back.
Right, okay. So let's see. Okay, so for example, let's see. Right. So, but maybe the simplest thing is just to go back to the formula. So in the formula, sales is equal to cost of sales, is cost of sales plus markup. Yeah. So we know that sales are cost of sales plus markup. Is that the best way of doing it, I wonder? Yeah, maybe.
Oh, sales, that will be gross profit plus cost of sales.
If sales are 500,000 and the markup is 60%, right? What is the value of the gross profit? So what I am saying here, this is question 8, make sure I get this right. So, sorry, there's a restart here, cancel. Let me get this right.
The way I get it was the 500,000 is already marked up, so that's 160%. And then did it that way.
Right.
Yeah.
Yes. So your sales is equal to your purchases plus markup.
Well, again, if there's no, well, I suppose there's no opening or closing stock, so it will be, yeah. Okay. So
if there was opening stock, then you would add that. Like, I'm just very confused by it.
Okay, well, let's not confuse it. Let's say our sales are our purchases plus our markup. Yeah. So that is that. So our sales, we know, is 500,000 because it gives us that. And what is that equal to? It's equal to our purchases plus our markup, which is by definition 160% of our purchases. Yeah. So
Yep.
if our sales, so then all I have to do is just divide that by 1.6. And did I get that right? No, I didn't.
Yeah. And then multiply by 100.
What?
Yeah,
Divide by 160 and multiply by
500 divided by 160 multiplied by 100, because you're 312, 312, 500
So give me that. So it's 500
divided by
multiplied by
160. Divided by 160
divided by 160 and
multiplied by 100,
Times 100.
multiplied by 100,000.
and that'll give you 312,500.
Yeah, okay. Well, I'm sorry.
And then the gross profit equals to 500,000
So,
less your 312,500.
you see, it's easy to shout numbers, and people who are confused are still going to be confused. So I'm trying to make it into trying to make it into a formula for you.
The page 32 helped me on the PDF for the risk module. And notes helped me, Declan,
Did it?
when I was doing that.
Yeah, okay. No, I'm just trying to put it into a formula for you that you just can calculate the numbers. Well, but again, if you understand the concept of margin and markup, you know, that's really what we're trying to get you to do here. And do you know what? It's probably a good idea if, let me see, if you. And I think it might be helpful in terms of the way I have done my answers here. No, I didn't. Yeah, in terms of putting in a formula into Excel, and if you do that, then from Angelina's perspective, it's far easier to see how you got the number. So if you got the number wrong, you know, you can say, look, you added your opening stock and you should have subtracted it, or vice versa, or whatever the case may be. You know, so maybe getting it into a formula, or look, work it out on a sheet of paper or whatever, and you know, just,
You know what, actually, I think it's just as well, I think it's a little bit of where it tells us to complete the tests in the workbook. I think some of those are too early on in the document for us to have the answers, and I was getting bogged down in stuff that I hadn't covered yet. Do you know, I think it's just the timing of those tests in the document is a little bit off, and I was just getting totally lost.
yeah, and
trying to figure things out.
Okay, well, look, that's believe it or not, that's the first time anybody has ever said that to me. So, you know, that's right. Let me just go through.
Because I got stuck on, I think it was question test 11 or 12, and I'm just looking at it now. Beverly's after saying there about 32, like cost of sales and all that is like way further in the document. So like, yeah, I was just getting, I spent so long trying to figure that out. I could not figure it out.
Well. Yeah, same. That
Yeah.
some questions
same
were,
for me.
you know, too early in the test, and then you found the answer later. But I wasted a bit of time.
Wait,
you know,
yeah,
to,
exactly.
what is
I
this?
had a
And
headache.
then I said, oh, yeah.
Oh, well, look, stop the headaches now. So okay,
There
let me
also
have a look at that.
the
Thanks, Marcel.
table
Yeah.
on the page 26 is very confusing because you expect some data there, so you can
Let me
follow
see,
the
page
notes.
26. Let me go to page 26. 20.
Yeah, I found all that very confusing.
Yeah.
Yeah.
Page 26.
Yeah. That is,
Oh, that's 25.
Yeah, for me,
Yes,
for
and
me
here
the test
we have
11
nothing.
and 12 was really hard. Those Yeah, the depreciation that's here. Yeah.
Okay.
Because a lot of times I was a little bit confused in the notes, but once I do have a numbers, I can analyze those.
Yeah.
And if we had that field, that would be way easier. Especially we have a question which is almost the same. And yeah, later on, a lot of times, yeah, you can look what the difference between previous table or the next one. And here we getting the empty one, and yeah, slightly,
Yeah.
miss. Also, when we talk about the notes, is the page 11 missing? That's dictionary. Or it's just typo.
Sorry, page.
I never
11.
noticed that.
Yeah.
Because I was looking for some terms, which I found sometimes using slightly different names. So I always was looking to the dictionary and I couldn't find it. And I
Oh,
found
11,
there's
yeah.
missing one page. So is that purpose just
No.
paging number issue, or we do have a missing page?
Um,
Or Declan messing with us again.
no, no. I did that once, and I've taken it out now. Sorry, Marcel, I'm not understanding you.
You
So
have a page 10 and page 12, no page
There's no
11.
11.
page 10
Yeah.
and page 12.
And there's around the dictionary when you have a terms and explanations. So I'm wonder it's just numbering issue. I do not mind, or we are missing some.
Yeah. Okay. No, that is a valid question. Let me investigate that. I'm not going to waste your time here. It looks like it went from stock taking to straight line method. So, there isn't. Like if it went from stock taking to working capital, then maybe there's a page missing. The lines are all in alphabetical order. Are you with me? So the fact that it's going from ST to ST, that's
Still could be STO and STR. You can feel, a little of them there. But my real question, if I could ask, I did that on the test to write, but that was more copy paste. We're talking about the page 29.
Page 29. So okay.
Almost end.
Okay. So page 29. Let me just go down to page 29. 25. Sorry, just let me just deal with this one here. What's page 29? Let's see.
Income
There's
statement.
28, 29. Yeah.
So my question is, what's the income statement difference and statement of financial position? Because here we have to classify that in the second column in the workbook. So actually what I look at to the notes, but I'm wondering, what's that? And also in the stock closing, you have trading plus statement of financial position.
Yeah, and this, I suppose, is another layer of, accountants trying to make life difficult for us. So for as long as we've been doing accounts, there has been a trading profit and loss and balance sheet. Yeah, so there's trading profit and loss account, and there's been a balance sheet. And that is what we have known it as. The trading profit and loss gives you, sales, purchases, cost of sales, expenses, and profit. That was called your profit and loss account. And then you had your balance sheet that listed all your assets and liabilities, what you owe and what you own and what you owe. Last year, the accountants, in their wisdom, in an attempt to standardize accounting practices across the world, decided that they were going to change the name from a trading profit and loss account to be an income statement, and that they would change the name of the balance sheet to be a statement of financial position. So this was
That's clear now.
a standardizing claim. So all
it's just changing names.
Nothing has
for the
changed.
documents.
They've changed the names to standardize it across the world. And again, we're in a bit of a dilemma. So if you're looking at old accounts, you'll be looking at trading profit and loss and balance sheets. From now on, any accounts that you're going to be looking at are going to be income statements and statements of financial position. So we're just sort of caught in the middle, and that's why, you know, we're, you know, sort of grappling with both definitions as we go through the course. But whatever you call it is right. But certainly last year when word came through, I would have updated the notes to include the new terminology, which is income statement and statement.
Would you not put the old terminology beside it in brackets or something, so that we, you know, so that when you're going through it, like, people will understand?
That might be a good idea, all right, yeah, but then sure, I have no secrets then at all. I know myself. Yeah, absolutely.
We're just trying to overcomplicate everything. Everything was working for ages now. Let's change the names. I'm not surprised. Accountants, it's the profession with the biggest number
that's
of
part of what we
suicides.
want to demystify, because you know, like what we've known as profit is now called earnings, and you know, they you know, and what I want to do is demystify it for you, that look, whether we're talking about profit or earnings or sales or revenue or whatever it is, these are all the same things, just with different names. But no, I do take the point of the brackets. Remind me again, Angelina, what stage are we at? This group has received, have they got the second set of notes yet?
No, that'll be this Sunday they'll get them. Yeah.
Okay, so that gives me all day tomorrow with nothing else to do. Okay, well look, I'll go through the second set of notes, and co-brand everything if it makes it simpler. Is that okay? So if you wait to get the updated notes from me, Angelina, before you send them.
Yeah, of course, yeah.
Okay.
Sure.
Declan, can I ask you, since you're there on the PDF, if you go to page 17 and 19, I have a question there because there is a difference on
page 17, is it?
17 and 19. Yeah, you're there.
Okay, well here's 17. We'll start with 17. Yeah.
Okay. So 17, if you see there, capital is on debit, right?
Yeah.
Yeah, so I thought that there was like fixed, you know, like every time I see capital is going to be on debit, but now on page 719, capital is on credit and sales as well. You see sales there on debit, and then on page 19 is on credit. So
okay,
I got confused with that.
Yeah, and that will happen. Okay, so what we have, or what the accountants, God bless them, have, right? They have two sets of documents that they are working with. They have the individual accounts that we're looking at here. So this is the bank account with all the different transactions. Is that okay?
Okay.
So that is the bank account. So that shows your capital and all your stuff. What they then do is, at the end of a financial period, they extract all the individual accounts out of the accounts and bring them into what they call the trial balance. All right. And in the trial balance, everything reverses. So in page 19, I'm hoping now that you are now looking at a trial balance. The following balances have been obtained from the various ledger accounts. I mean, whether accounts, debit or credit. So when we're looking at a trial balance, it's the opposite to what they were in the individual accounts. We will never see individual accounts. Sorry.
Okay. Well, will you title that trial balance or statement of financial position or something, so that we understand that we're looking at it the other way around?
Yeah, let me see. Yeah, okay.
Well, no, it says the second one is the trial balance.
Page 19 is the trial balance, yeah.
Yeah, but there's two tables on 19 there, and it says from the above list of balances, you can now extract the trial balance as follows.
Yeah.
So what's the one on the top then, if the bottom one is the trial balance?
The The one on top is the blank one. And then what we've done is we've extended the figures across into the individual debit and credit.
Oh, right.
Are you with me? So I've
Yep.
just, where would you normally expect to find it? So capital is a credit and office equipment is a debit. So I'm just extracting, so taking this table here, duplicated it, and just extracting the numbers out. And again, the fact that it's a trial balance, you kind of, it's a good indication you have it right if it balances. that's a clue that you might have things in the right or wrong place. Is that all right? So that only gives you, you know, the balances that they extracted from the accounts, and then this is in the trial balance here. Yeah.
Okay. I
So-
think it'd be helpful if you put that on the top of that page or something, that we know what we're actually looking at. Do you know, as a heading or something, up at the top of the page above both of them, because both of them are related to the trial balance.
Above both the tables, you mean? Yeah.
Yeah.
Yeah. Okay. Well, yeah, we can.
I think that would be helpful.
Yeah. Yeah.
The previous.
We're
the
improving
previous-
all
what's
this
kind
for
of
the next,
confusing
the
is-
next group.
yeah.
I would say here we know it's about the trial balance. Every other table on the page 17, it's marked as account.
Yeah, it's account. Yeah. Yeah, but
So there's
Yeah,
the
but for
account
people who
ones are
aren't-
marked as a
But for
different
people who
one.
aren't used to this, for people who
So
are very
pages-
new to this,
Yeah. No, look, and what I want to do, I want to make it as simple as I can, and I want to, you know, yeah, to
Because-
clarify. And this is why, you know, this is what it's all about. It's all about simplifying it. And if there's anything I'm doing, I'm quite capable of confusing you as well, and that's why I'm stopping myself. I'm conscious because I'm kind of one of these guys that just sees the answer and can't see why anybody else can't, you know. So anyway, that's neither here nor there. So okay, so I have that. So it's just trial balance heading on that page. Page 11, I'll go and find the missing page 11, and I'll hit them up for you as well. So hopefully that makes sense. And any more questions, please, as I'm going through the notes. Anything that doesn't make sense to you? Yeah. So
Question to Lynn. Declan, can you do the explanations of the formulas for us?
which formulas? The
On the short test, you mean?
on
you're on mute, Beverly. We can't hear you.
Yes, please. It's question 10 on the short page.
question 10 on the short test.
Okay.
Yeah.
The only thing
okay.
I'm just conscious of is that not everybody has submitted their tests. We can send the solutions to you, or what do you think, Declan?
I think everybody should get a turn to do it again, because I think it was a bit unfair. No, we were very lost.
Okay. Yeah, that's fair enough.
Sorry, where's short test one? Here's this one for here.
Number 10, Declan, the one at the bottom.
Oh yeah, that's a lovely one. Not really.
I think that's when I just walked away and said,
That's
"I
one
can't
of
do
the
this."
nicest one. That's it's clear algebra. Just
Mark-
numbers.
Angelina, I'm impressed. I got it right, but I don't know how I got it right. So
Yeah, I know.
I think that would be good before exam. We'll prepare all kind of variation because we do not have too many unknowns here. And
Yeah.
then if we do have a spreadsheet with all answers, then we just quickly find the proper way of decanting which we need. That's
Yeah.
I think that will help us cheat the test.
Yeah.
Okay.
Okay. So that
So in terms of doing the solutions, then that you want a breakdown of, I think we have that. How the say number 10 is calculated, Beverly. I think that's what you're asking, isn't it? Kind of a step by step as to. how you work it out. Am I right?
Yes, please.
Okay, we'll have a look at it. Well, definitely.
Okay, so let me see. So what I'm saying here is, yeah, I'm looking at it again, and maybe look, I can understand why people are confused by it, and maybe that's not what we're trying to achieve here. We're not trying to trip people up and whatever, and so yeah. So let me see. I'm just thinking. No, look, guys. You can ignore question 10 altogether. No, it's probably too involved for the course. Now, I know, Martin, you love these kinds of challenges. They're like sort of word puzzles for you. No, at where we're at the moment, I'll come up with a different question 10.
But I think there's answer on page 31.
Oh, look, I can answer it. Like it's fairly simple. But at this stage, what I want to do is eliminate what can cause confusion. Are you with me? And I can see why that would cause confusion. I think everything else, yeah, the gross profit percentage caused confusion there. I've got rid of it. There, straight apply the formula, which is fine. They're just, multiply by 10, which is fine. That's just the definition, which is fine. Your markup and margin, again, that's just a formula. So look, we'll, Angelina, if you have tests already in, just give everybody the mark for question 10, and I'll put a new question.
We can have a chat anyway, Declan.
Yeah, we will, and we'll update that. No, because I want to be fair. I want to challenge you a bit, but looking at that, it's probably too big a challenge for this stage.
But what was the right one?
Oh, C. Sorry.
It was C. Okay,
C, yeah.
thank you.
Yeah, because B minus A is sorry. Where is it now? I need to undo. Yeah, because B minus A is your cost of sales. So if your margin is A divided by B multiplied by 100, then A is your sales, and B minus A is your cost of sales. That's it. Yeah. So anyway, look, maybe I've got rid of it. Yeah, but it is C.
Thank you.
Right, that's the short test. Yes, anybody who has submitted it and has learned something tonight, your prize for coming along here tonight is resubmitted, and we'll give you the benefit of the marks. Just in terms of the work, they're the notes. In terms of the workbook, has anybody got any questions on any individual tests in the workbook before we wrap it up for this evening?
Yeah, sorry.
Yeah, go ahead.
Okay, so go ahead.
Test number.
Test number 10, 11. From number 10, it started to get sort of tough, and then after that, it was sort of okay. This one, yeah, this one was not sure what it is about.
Okay. So just let me explain. Extend the balances for each item into the correct column. So again, all you have to do. So this is a trial balance. This is a trial balance. So just look at the previous one in the notes. Are you with me? Or look at a trial balance in the notes, and you will see which side these things go on. Are you with me?
That's the one with the empty
But the second part,
empty table.
the second part, that's where I didn't understand.
Now this
What
is
was
where
expected.
it does get,
Confusing.
yeah, this is where it does get difficult, I suppose. So let me just, I've got about 47 things open here now at the moment.
When there's a lot of adjustments, and then yeah, that gets confusing.
Yeah, it does. And I'm sorry, I'm not going to, let me just do this. Where am I now? Oh,
Can I just ask, like the workbook with the 13 tests, are all of those for the same week, or are, you know, are they spread out, or what, like what, how do we send those in? Like, are they
no,
every
no, you
week?
don't know. The workbook is just for your own benefit, just to help you as you go through. So,
Like, so like, is there going to be that many of those tests for every?
well, no, these, you know, this is only to help you going through the notes, because I know with accounting, and anything that's accounting related, you read it and it's simple, and then you look at a blank page, and it's
very challenging.
It gets harder. So in terms of this, what we expect you to do here is, and just go back and look at the other examples in the notes in terms of what's on the debit side, what's on the credit side. Are you with me?
I actually found it easy if I kind of color coded. So I did all my
color coded.
I just blocked off everything that I thought was a debit in one color and everything that I thought was a credit in another color. And I
Yeah,
did that the whole way
absolutely.
through the workbook so that I could figure out. So I color coded them first, and then I knew which ones to drag
Perfect.
across.
Yeah, and that's probably the best way to do it. Now let me see. I'm just showing off here now. See if I have it right. Your bad debt provision is there. Your trade payable creditors, and finally your bank balance. Now your bank balance is the only one that could go into both. So anyway, that's anyway there. But look, guys, if you put it in the wrong one, now your trial balance doesn't balance. Are you with me? So you know, that's that. Now there are ways of balancing. I might as well tell you the fact that you're here, and we've gone way over time anyway. If you have a difference, if you're reconciling any account, be it a customer account or a payment, or no matter what you're doing, what you do is, if I have a difference between two sets of numbers, I simply subtract one from the other and see if I can find it. So if I come down here and my trial balance doesn't balance, I go, oops, what's going on here? Then I go, okay, so I just add that and subtract that. My difference is 35,000, and then I go, look, you Egypt, you never put in the office equipment bump, so I found it, it's done. Yeah. If I do something stupid like this, 2490, if now my difference is I can't find my difference, because if you look at this, the difference between this and this is now, sorry, it shouldn't be, because I put it in twice. So I can't find my 4980. I don't have a 4980. So what I do is then I just divide that by 2. So if I divide that by 2, that means, and it's 2490, it means I've put something on the debit side that should be on the credit side. So I found it, it's there, bump, it's done. And the other thing just that might help you on a day-to-day basis, if your difference can be divided by 9, watch this now. So if your difference can be divided by 9, so here's, I've 18,000, which is divisible by 9. if you get a number that can be divisible by 9, what you've done is you've gone and transposed numbers. So I've put in an 86 instead of a 68. Are you with me? So anytime you have a difference that can be divided by 9, it means you put in 43 instead of 34. Okay? So that's what was required there, just to follow the formulas and slot them in so your trial balance balances. And then what we do, and this is probably as difficult as it gets. So so in terms of our cumulative depreciation, we have our figure here of 7,000, and it's depreciation, so it's minus 7,000. Yeah. And what it says is here, the charge depreciation for the year at 20% of the costs of all fixed assets. So now we have to look at our charge depreciation of the year of cost of all fixed assets. So your fixed assets there are, well, I think the only, so sorry, it's split up. Yeah, so furniture. So we start with motor vehicles. So motor vehicles cost 68,000, right? And we have to get 20% of that. So there's your 68,000 multiplied by 0.2 or 20%. Sorry.
This is where I started just
Yeah.
losing it, and all the pluses and minuses, and it just confused the hell out of me. And it just got worse after that.
Declan, can I ask, in this case, for the workbook, can we have a workbook with the answers, not to copy, but like to compare our answers and check if they are right or wrong, and see what we are doing wrong?
I'd prefer an answer that tells you how you got the answer, because I can see answers and I can still be confused. I need to know how they were.
The detailed working out of it. Yeah.
Yeah.
Yeah, but you see what I'm endeavoring to get you to do is to understand. So it's not so much about sums, it's about understanding what you're doing and why you're doing it. That's what's behind my thinking, even developing the course way back. This is what I want you to do. I want you to think about what you're doing. And I also think, maybe you're, not being accountants, maybe in this, even introducing stuff like debits and credits might even confuse you.
No, but if that's what I'm saying. I'm looking to understand it. I do want to understand it, but I feel like maybe it's not explained enough in the notes or something, or it's just very confusing. I want to understand it. I just can't get it.
Okay, so you're specifically now talking about the adjustments, is it?
It's everything from this point on. I got totally lost, and I just closed the laptop and went, I just can't anymore.
That's it. We're out of here.
Yeah. I don't even think I got to the last page because I just gave up.
Okay.
I think I spent about 2 hours trying to go through a couple of pages, and I just had a headache.
A couple of pages of the notes.
A couple of pages of the workbook there, and and going through the notes for it and trying to work it back, and I ended up more confused than when I started.
Okay, so it's here. So and the adjustments are a different thing. Guys, I'll tell you what I will do. Rather than delay it tonight, what I will do is I will record a Zoom session on my own solving this one. Is that okay?
Yeah, that'd be great.
And so on test 10, because I think 11 and 12 are, well,
no, 11 and 12 and 13, they're all just
debits and credits. Yeah,
It's
so
putting
it's
them
just
into
next
context,
one.
yeah.
Okay, so and test 10 is a key one. I can't get rid of this one. So what I will do is explain adjustments. So test 10 in the workbook, I will do this sharing my screen on a Zoom call on my own, and I'll share that with you. How's that? And
Right.
I'll
That's
explain
great.
Perfect.
what the numbers are going in and why the numbers are going in. Yeah.
Yeah.
And hopefully that'll make sense to you. Go, yeah, of course. That's the reaction I want. Okay, I will do that rather than spending time now. Okay, so that's that. No, I must say I appreciate your time and effort in this. You leave now. Oh, there's Brigitte. Yeah, okay, just go. Anything else that you want me to do that will help you? No. Okay, look, let me
should
let me
get
do
used-
what I'm doing. I'll find page 11. I'll put headings on page 19. I'll explain the adjustments for test 10 in terms of what you're doing and why you're doing it. And I'll have a look at the workbook 10 and 11 or 11 and 12 to see have I got that in the right page in the notes, or should I push them on a bit, give you more information before we test you on it. Yeah, okay, that is that. And as I say, you can resubmit your short test if you've done it already, and we'll give
Can
you
I
a
ask-
bit of the marks as well, and we'll give you marks for question 10 whether you've answered it or not.
The
Excuse
next
me,
set
can I-
of notes coming on, Declan, are they going to build on these? Are they going to become more difficult?
No, they are not going to become more difficult.
Okay.
That's a given. No, and in a way, this is a baptism of fire. So what we are doing in notes 1, we're giving you the ins and outs of what goes into if you want to call it a profit and loss account or an income statement. That's everything that's there. In notes 2, we'll do the same for the balance sheet and give you the ins and outs of the balance sheet, which is fine. And then I honestly think, so that's all the information that you need. When we move on to modules 3 and 4, this is when I think, hopefully the magic happens. What we'll be then doing is that we understand the numbers, what they are, where they came from. Now we'll start interrogating those numbers to get the numbers to tell us a story that we can start understanding whether these accounts are good or bad. Are you with me?
Yeah.
So, and I think module 3 and 4, to accountants, they probably find this harder. To credit people, we love the analysis and we love the ratios and we love working out, good, bad, and indifferent. And this will give you the keys to do it. So no, I think module 1 is probably the hardest.
Okay.
Yeah. Is that okay?
Yeah.
Guys, I did make we go on for an hour and a half, but I'm glad we did. If there is anything you want to, drop us emails, talk to Angelina or myself, we're happy to help. And certainly in terms of what's come out of tonight, that's written off tomorrow for me. Thanks very much. I had plans, but now they've been changed. So I will get this done and I will get this over to you, over the weekend or maybe even tomorrow evening if it all works. And if there's anything else that you want or need, don't panic. Don't panic. Yeah, I love using the word don't. Please don't. Just go through it, and if there's some, if you don't understand it, give it a second go, and rather than spending hours on something, and I'm not saying be lazy and get us to do everything for you. We can't do that. If you've given it a go and given it a second go and you're still lost, that's what Angelina is there for, and that's what I'm there for as a backup as well. So please, if you don't get it, it's our job to teach you. That's the whole point. And look, we know you don't know this stuff. That's why you're here to learn, and that's why we're here to teach, and to that you walk away from this course go, yeah, I used to think accounting was nightmare. Now I get it. Now I can see how it happens. That's what we wanted to achieve on this course, and I'm committed to make sure that's what's going to happen. Is that okay?
Thanks very much.
And
Thank
everybody
you.
has
Thank you
an
both.
aha
Really
moment.
Thank you
appreciate it.
for your
Thank
time.
you.
Thank you.
Through that.
That's
Go
really
have a great
good.
evening, and
Thank you.
yeah, we'll be in touch. I'll be in touch later.
All right. Take
Thanks.
care.
Bye bye.
Bye. Bye.
Take care. Bye bye.
There's our youngest student. Yeah.
Actually, if you want to stop recording there, Declan.